Tom Reynolds, one stock you like in the Perkins Small Cap Value Fund is Cedar Fair. Now, the amusement park operator has been benefiting from lower gas prices, but the stock really hasn't been responding over the past 6 months. Why not?
That's a great question. Attendance should be pretty good. Weather has been a problem the past couple of years, which had created the opportunity in the stock. The same-store sales or comps year over year were a little tough in their Canadian business, but right now with lower gas prices, and continued employment gains and lower U6 rate and all that, we'd expect the next 12 months look pretty good for Cedar Fair as families get out and participate more in the parks.
All right, and you're also bullish on Simpson Manufacturing. Now this stock, this company has about $250 million in cash, no debt on its balance sheet. It seems like it's either a good takeout play or they can lever up and acquire someone. There's a lot of things you can do with this company.
Yes, this is a classic Perkins company. The balance sheet is fantastic. It is directly related to residential construction in the U.S. and through the housing crisis did not cut its dividend. So it's a very well-run company with a tremendous balance sheet, and the management really cares about it. So this is really just a nice, stable way to invest in a housing recovery. It's been slow and steady over time, but if you get back to any sort of normal level of housing, they're going to make a lot of money.
And you're also positive on Encore Wire. Copper prices have just fallen off the table, but the stock's been kind of volatile, really up and down. One would think that would really help this company.
The great thing is about Encore Wire is almost regardless of where copper prices go, they've been compounding book value. So they buy the copper, turn it into the wire, distribute it to customers who are using it as, in cables in large buildings and things like this. So a nice non-residential construction play. Stable copper prices are best because they can maximize the spread, but there's a perception that it's bad for them when copper prices fall. It's just not true. Book value has compounded at 10% over the past decade. Even as copper prices have been cut in half.
And then lastly, you are a fan of Bank of Hawaii. The stock's doing pretty well this year. It's up around 6 or 7%. What's the lending environment like in Hawaii right now?
Well, we like to say Bank of Hawaii has a wide moat. It's a great competitive advantage. It's got 32% of the deposits in Hawaii. The key about Bank of Hawaii is if we ever get into an environment where interest rates are higher, they have significant earnings leverage. Their net interest margin has been cut from mid-4s down to about 2.7. If they recapture just half of that, you're looking at $2 per share or $3 per share in additional earnings power. Stock's trading at 10 times that. Company likes to buy back stock, has a nice dividend of over 3%, really well-managed company. And the Hawaii economy has been doing well despite the weaker yen and not the best tourist environment, so it has been doing well there.
All right, well, thanks a lot, Tom.
Yeah, great. Thank you very much.
And thank you for watching The Street.